Momentum continues to build behind bonds. Are you going to miss the breakout? This is Sunday Night Charts. So we take a look at the charts to help you with the trading week ahead. I'm your host, Steven Van Metre. The colors on your screen, the moving averages, 50 days green, 100 days blue, 200 days tan. Price versus momentum. Price is a general direction prices are headed. Momentum is the rate of change. A bullish indicator for both is positive, and bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is a level buyers can't break, and support is a level sellers can't break, or resistance is where sellers are at, and support is where buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of trade, help with time of trade, and provide direction to the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Let's take a look at the S&P 500. Not much is going to change in the equity funds. The real story here is going to be when we get to bonds. If you missed the Thursday show on the Wyckoff price action, you need to go check that out when you're done. All right, let's get into the S&P. Again, nothing changing because the S&P pushing back. We have a new all-time closing high on SPY, not a new all-time closing high on SPX on the broad index, but on the ETF, you see it pushing up right back where we've seen sellers right here at this 422 to 423 range. Sellers have been there. You see this volume profile, and what's interesting is it hit this, looking back the last 6 months, the most shares have been traded right here at 415.72. What happened? Prices came down. That's where buyers are at. The buyers are moving up higher. Sellers have held. Monday will be interesting to see. Can the buyers keep this going? Because the ball is in the buyer's court. Sellers are just up here selling. They're not driving prices lower. They're just selling into this buying demand. So the question is, can buyers keep driving equity prices higher? Well, keep an eye on the markets on Monday to find out. Let's go to the QQQ, the NASDAQ 100. Again, we're not seeing a lot of changes on the equities here, but the NASDAQ is looking very topish, and let's go look over at it from a chart perspective. We see a different picture in the S&P 500. You see a potential left shoulder, head, right shoulder building. The NASDAQ does not have momentum behind it. As you can see, the momentum screen is still all bearish. Heavy volume support down at 316, telling you this is what is the neckline of your topping pattern here. So those who are bullish on tech stocks really got their work cut out. They're running right into some resistance here. You see this cluster of volume here in green. What is it telling you? This is where shares are trading hands. Not as much as down here, but shares are trading hands. This is where sellers have been. And if buyers can get through that, well, they've got more sellers waiting at 340 from what you can see. So right now, sideways action, looking topish on the NASDAQ. The real key, though, is what's going on with small caps, because small caps tend to lead the large caps. Price now flipping back bullish across the board, and annual momentum on an ultra short-term back bullish. That is about as meaningless as anything. You want to see these longer-term trends flipping to really give you some strength. 1 month momentum is negative and rising. The 3 month now back green. Let's look at IWM in the small cap space here, and what do you see? Potential topping patterns going sideways. Sellers dominating the tape right here around 227 to 229. You can see every time it pops up here, sellers are there. What is helping the bulls, the bull case here, is you've got this heavy support of volume at 221.72. So you could expect that prices are likely to come back down and retest that. Are the buyers still there? Problem with the Russell right now is it's heavily loaded with meme, small cap stocks, and driving prices higher. So can the bulls keep bidding those very illiquid stocks higher? Maybe they can. How about the energy sector? Price going back green as crude heads higher, and momentum flipping back bullish on both ultra short term and the short term. Now momentum clear green across the bottom as you see on your screen. Let's first look at crude and see price bullish, came right off support, boom, up into 70s. But remember, the challenge with crude is every time it's getting up into the space, every time it's gotten up into the 66 to 68 level, there's been sellers. So are the sellers letting the buyers run this out to bring it back down? That is the question. The crude oil inventory reports are looking okay. We're still below the averages in product levels. Can that hold? Everybody wants higher crude. They don't realize that that is not what the economy needs right now. Not at all what the economy needs. Economy needs lower prices. Let's go, not back to that. Let's go to XLE. And what do we see? finally, remember I said at some point it's going to hit that upper zone. Finally, it did. And there you go. You zoom back. What is so special about 55.75 from a technical perspective? Well, we got to go to the weekly chart, it looks like, to really get a look at this. It is a heavy level of resistance on XLE. You can see where once was support now becomes resistance. So the question is, are the people that eventually sold here, brought prices down, now back into sell zone or not? That is the question. So you can see if this is a major level of overhead, what is called resistance. And for those who are bullish energy stocks, well, you've got support at just about $49 a share on XLE. So as of right now, this should act as resistance for the energy sector. On to financials. Everyone's bullish on banks who are buying treasuries now again and not lending. Annual momentum is almost bullish across the board. Let's take a look at what's going on with financials. And XLF pushing back near new all-time highs after a little bit of consolidation there. Again, everyone is thinking the banks are going to make a lot of money. They're making their money on trading, not lending. Trading can dry up and go away real quick, but no resistance holding that back at all. None whatsoever. On to the utility sector. No real changes here. I think the 3-month momentum has switched. The 1 month went red. That means it's negative and falling. The 1 month can switch. It's not really a big deal. When you start seeing the 1, then the 3, then you start going, okay, there's maybe a problem here. And we're still in that same pattern with utilities. We can zoom back out on the 1 year. What a bull would say is a bull flag, still building, still not breaking out. Heavy support sitting back here at 62.50. So this could easily, if bulls don't get behind this, come down and retest support. We'll just say around the 62.5 to 63 level. But so far, nothing going on utilities for the last couple weeks. Nothing at all. Just more of the same trend. How about industrial stocks? This is mimicking the broad indices. So price bullish, annual momentum bullish. And let's get on to gold miners. Now, this is the topic that a lot of people are interested in. Remember, at one point, this was all red. And I told you, momentum was one of the most powerful signals. If you wanted to trade this, you saw it turn. Same thing as building in bonds. Will you miss that too? That is the question. Let's take a look at GDX. Now, the 9-month momentum being red isn't really a big deal. You can have one of them red and not really have much to be concerned about. It's when you start seeing multiple things start to move, and you would see that coming out of a bottom. Let's go back to the 1 year chart. So you see this move here. Looks like it's you see very short term from price action. It's topping, but the trend is bullish for sure. Now, what would you want to really confirm this is a bottoming pattern? You would want it to come down and retest support. That's what you want to see. Where is support? 35.60 to 36. You want to see this. If you're bullish on mining stocks, you want to see it come down, confirm that this was an accumulation on a bottom. So far, there's no evidence to support either way until it comes down here and retest support. So look for a retest, want a retest if you're bullish on this. If you're bearish, then you want to see a retest and bust right through on the way lower. But yes, look for a retest at some point. It's got to happen for the markets to confirm that is a bottom. How about emerging markets? Now we've seen a bit of a turn here with price on the short term flipping, as is annual momentum on the short term. And now all the momentum screens are back green. Doesn't really tell what's going on with emerging markets, but let's take a look. And all of a sudden they just gapped up last week and flat ran into resistance, where we've seen sellers back here at this, was it 55, almost 56 level. And now, instead of that volume, remember that volume was acting as resistance. Now that volume is turning into support at 54. So again, if this is a bullish move now, if this was a bottom, again, just like GDX, you want this to come down and reconfirm that indeed these are buyers taking this higher. Of course, you also want to look at the dollar. Remember, emerging markets and gold mine stocks do have a relationship. They can be apart for a while, but they will eventually come back together. So if you're bullish on one, you've got to be bullish on the other. Again, look for a retest of support to confirm that. Always want that. More times it confirms something, the better it is. How about high yield bonds? Not much of a change here, other than I think the 1 month momentum is negative and falling, but not a big change. We've looked at high yield bonds and said, look, this could be where the risk is at. Let's pull up HYG, and you can see this heavy zone of volume at 87.15 is acting as resistance. Every time price gets up here, thou shalt not pass. And if you're bullish on equities, you need to be bullish on high yield bonds. And that is the problem. High yield bonds are not confirming higher equity prices. So this is telling you a bit of caution if you're bullish on equities to keep an eye on this. If this rolls down, then watch equity prices that will turn at some point. Keep an eye on that. A lot of people don't look at the bond market. They just ignore it. Tells you a lot. So we've been looking at TLT, and remember last week we were bullish across all price through intermediate term and annual momentum. We see a little flip here in the short term. We'll look at that. The 12-month has gone. This has been dancing back and forth. It went from negative and rising, now red, to negative and falling. This isn't a big deal because I can look at the data behind this and tell you the 1 and 3 month are about to go green. Remember, this was all red. Everyone, and what did people say? This is done for. And I said, don't worry, it'll switch. When you see all red here, you start thinking opportunities coming. And let's take a look at TLT. Again, if you didn't see the show on Friday, on Thursday, where I talk about the Wyckoff method and TLT, you really need to go look at that because what you're seeing is a textbook bottom here. Look at the 50-day moving average. Now price is finding support on it. Rallies begin with a cross and confirmation of a 50-day. Not the best confirmation you want, but it's holding. Now look at this volume line, 139.73. Price jumped way up there on Friday. What we should see next, if this is indeed a Wyckoff bottom, let me zoom in, is we should see price maybe move up here, maybe just beneath the 100-day moving average, come back down and do what? Test support. See, this line is acting as resistance. You might say, well, that is resistance. What I'm going to suggest to you, this is where the big buyers have been at. Buyers have been gobbling up this at 139, looks like 58. It'll come back, it'll go up, come back down, confirm that as support. That'll complete the Wyckoff bottom, and then price goes up from there. Now, what's interesting about bonds, due to all the overnight selling, there's not a lot of trading volume to hold this back. So there should be a fairly quick move up into 152, and then you look for the computer models to kick in and start going from short positions into covering their short positions before they start going long. You've got a lot of momentum building right down to here. You're going to miss this? Well, maybe. That's okay. If you miss it, at least you'll maybe realize these signals have a lot of value and look for the next one. Remember, if you miss something, the bus comes around sometime for something else. How about gold? Not a lot of change. Long-term went bullish on price and momentum. Ultra short-term went bearish. No concerns about this flipping back and forth. 9-month momentum is still negative and or is now negative and rising. I don't think that changed. I think it did. It went from red to gold. Again, one of these can be off and is not a big deal. It doesn't signal there is a panic. And what's going on with gold? It got through that resistance level of 1840. It needed to get through. It jammed through there thanks to CTA computer models short covering a little bit. And some of them short covering, some of them adding to their longs. And what do you want to see here if you're bullish on gold? You want to see it come down and confirm this is a bottom. And if you're bearish on gold, then you're thinking that this is still part of an elongated topping pattern that's just flushing out on all the bulls. In the meantime, you want to look for support 1840, bullish on gold. You want to see that hold. Bearish, you want to see that break. There's nothing wrong with reconfirming support. How about silver? A lot of people are really interested in silver. I know the Reddit team is trying to break silver. It seems to be unable to. Will they get it? Let's look at the charts. Price bullish now. Annual momentum flipping back bullish through short term. Everything across the bottom is green. That is positive. What does the chart say? Well, the chart doesn't really bode for a breakout here. We're still in a consolidation pattern. On the 1-year chart, you see there's a lot of volume at 27.23 trying to act as support. The question is this where sellers at? That's what we don't know. Is this where sellers are at? That is the question right now. If you're bullish on silver, you really want this to be where buyers are at. If you're bearish, you're hoping this is where sellers are at. And indeed, on the 6-month chart, You've got major volume support at 26.20. So yes, can this come back down and hold this? That is the question. If you're looking for that big move in silver, like happened with AMC and some other stocks, well, then you really need this $27. We'll be more specific. You need 27.23 to hold, and you need buyers to come in here, because otherwise, what you're seeing at this level is sellers. That's what you're learning right now. Is this where sellers are at? We know this is a sell zone. I've identified. See those two bands right here. This is buyers down here between these two, sellers up here. The question is, are the sellers really done, and have the sellers switched to buyers? That's what you're looking for if you're bullish. If you're not, then silver's headed back down, looking for potential retest into the $26 price range. And last but not least, if you are bullish on metals and bullish on EEM, emerging markets, then you're bearish on the dollar. But remember, dollar was all red, and it's fighting here. It's putting up a battle. 1 month and 6 month momentum are negative and rising. We see the 12-month flip back, not a big deal. This one, it'll flip back and forth. When it's flipping, it's telling you it's trying to bottom. And by the time this goes clear, you'll have missed it. It's 3 and 9 month negative and falling. Not a surprise. Price, a little change there on ultra short-term annual momentum. There's a little switch back on that. Momentum was trying to lead this up. Let's look at price, because you're looking at something significant in the dollar. We're going to look at DXY, and then we'll go look at UUP. I've got all my lines on DXY, and the reason DXY is important is you've got a bottom at 89, and it kind of retouched it again in February and retouched it again here in May. So the dollar is telling you it's trying to bottom. You can see the 100-day moving average flattening out. The 50 days kind of all over the place. What about UUP? What is it telling us? Let's go here in the 6-month chart. And it's telling you kind of what TLT is. Hey, have there been buyers sitting at this 24.51 level? If there are, that tells you this is a bottom. This will act like a price magnet, bringing the dollar back up to probably right in here in the 90. I'm trying to look at this and line it up. Yeah, it looks like it'll bring it right back up into this $90 range. If this acts like a magnet and pulls price up, that tells you where the buyers are at, and that is giving you evidence this indeed is a bottom. So hopefully you enjoyed today's show. We'll see you back on Monday for the macro show. Have a great weekend. Bye now. The content of this video is provided as educational information only. It's not intended to provide investment or other advice. This show is not to be construed as a recommendation or solicitation, buy or selling a security, financial instrument, or to participate in any particular trading strategy. This video was prepared by Steven Van Metre on personal capacity. Opinions expressed in this video that do not reflect the view of Atlas Financial Advisors Inc. or Steven Van Metre Financial.